You are about to hand the ATO a $3,500 gift because of a simple calendar error. And the worst part is, your payroll department probably won't even tell you until it is too late. If you are over 45 and earning a high income, you are currently standing in a financial minefield as we approach the 30th of June. Welcome to Aussie Super Secrets. Today, we are exposing the BPAY death trap and the exact reason why thousands of hard-working Australians lose their tax deductions every single year. At the end of this video, I will reveal a hidden strategy to audit your payroll department before the deadline, to ensure your wealth stays in your pocket, not the government's. You cannot afford to miss this. But before we dive into the technicalities of your wealth preservation, a vital reminder. This is general information only and does not constitute personal financial, taxation, or legal advice. Always consult with a qualified professional like a licensed financial advisor or accountant before making significant moves with your capital. Now, let's talk about the $30,000 rule. For the 2025 to 26 financial year, the concessional contribution cap has been indexed to $30,000. This is your golden ticket to tax minimization. But here is the catch that ruins lives. The ATO does not care when the money leaves your bank account. They only care when it lands in your super funds account. Imagine Sarah. Sarah is a senior executive earning $210,000 a year, placing her in the highest 45% marginal tax bracket. She decides to make a last-minute $10,000 salary sacrifice contribution on the 28th of June to slash her tax bill. She feels confident. She thinks she has just saved $3,500 in tax after the 15% internal fund tax is applied. But Sarah forgot about the clearinghouse delay. Most employers use a clearinghouse that can take 3 to 5 business days to process payments. If that $10,000 doesn't hit her industry fund, like Australian Super or ART, by midnight on the 30th of June, Sarah loses the deduction for this year. She has effectively handed $3,500 back to the ATO for no reason other than poor timing. It is a total disaster. But do you know the absolute worst thing the ATO can do to you if you mess up these dates? We will see that in a second because the penalties for exceeding your caps are even more brutal than missing the deduction entirely. First, you must understand the received by fund rule. If you are using BPAY or EFT to make a personal deductible contribution, you need to treat the 23rd of June as your soft deadline. Anything later is a massive gamble with your retirement savings. In the world of high-stakes wealth management, we call the period from the 1st of June to the 30th of June the danger zone. This is when you must be hyper-vigilant about your super guarantee or SG payments. Now, let's talk about those of you with a total superannuation balance, or TSB, under $500,000. You have a secret weapon called carry-forward contributions. This allows you to use any unused portions of your concessional cap from the last 5 years. If you've had a big capital gain this year from selling an investment property or shares, this is how you wipe out that tax debt. But again, the timing is everything. If your payroll department is slow, or if your retail fund has a complex processing system, those catch-up contributions could fall into the next financial year, potentially triggering a breach of your $30,000 cap for 2026 to 27. It's a domino effect of financial pain. But wait, it gets more complex for the high flyers. If your combined income and super contributions exceed $250,000, you hit the Division 293 threshold. This means the ATO slaps you with an extra 15% tax on your contributions. For a high net worth individual, this turns a 15% tax environment into a 30% one. It is still better than the 45% top marginal rate, but if you haven't budgeted for that Division 293 bill, it can be a nasty shock when your notice of assessment arrives. Are you still leaving your money in a MySuper default option? For balances over $300,000, the default fees in some industry funds can be extortionate. You should be looking at choice or member direct options that offer admin fee caps. Why pay a percentage-based fee on a large balance when you can cap it at a few $100s a year? This is how the wealthy stay wealthy. They don't just focus on the tax they save going in. They focus on the fees that bleed them out over time. General information only does not constitute personal financial, taxation, or legal advice. Before we move to the final audit checklist, remember that the Stage 3 tax cuts have shifted the goalposts. For those earning between $135,000 and $190,000, your marginal rate is now 37%. If you earn over $190,000, you are at 45%. Every dollar you salary sacrifice under the $30,000 cap saves you the difference between your marginal rate and the 15% super tax. It is the most effective legal tax shelter available to Australians today. But here is the climax, the final secret I promised. How do you audit your payroll? You must ask your payroll officer for the payment date and the expected receipt date for your June salary sacrifice. If they tell you they process on the 28th of June, red alert. That is far too late for most clearinghouses to guarantee a 30th of June arrival at your fund. You should request that your June salary sacrifice be processed with the May payroll or as a special ad hoc payment by the 15th of June at the latest. If they refuse, you may need to consider making a personal deductible contribution from your after-tax cash, and then claiming the deduction in your tax return using a Notice of Intent to Claim form. This gives you more control over the transfer timing through your own banking portal. If you found this breakdown valuable, and you are tired of watching your hard-earned wealth disappear into the ATO's coffers, you need to be here for our next episode. This Thursday at 7 p.m. We are exposing the hidden fees in retail funds that are quietly draining $100,000 from your retirement nest egg. Don't let them win. Subscribe to Aussie Super Secrets right now and hit that notification bell so you never miss a tactic. We are here to help you navigate the complex world of Australian superannuation with the authority you deserve. See you in the next one where we continue to protect your future. Aussie Super Secrets, signing off. Disclaimer: the information provided in this video is for general educational purposes only and does not constitute financial, taxation, legal, or home loan advice. It has been prepared without taking into account your personal objectives, financial situation, or needs. Before acting on any information, you should consider its appropriateness and consult with a licensed professional, such as a financial planner or tax agent. Specific results or future performance are not guaranteed. Copyright symbol 2026 Aussie Super Secrets. All rights reserved.